not every financial advisor understands the rules, oh God, no kidding, of retirement plans, and that can be or should be a red flag for both plan sponsors and participants. Now here's the thing, it's not just about investments. Advisor blind spots very often show up in plan operations, fees, and compliance, and that's where the real risk lies. So let's start with the first red flag. Number one, focusing only on investments. When you tell somebody who's been doing this for a while and has a substantial book of retirement plans that the actual investment options in the plan are the least important part of plan design,
They cry.
No. That person understands and agrees. When they talk about asset allocation while ignoring plan design, fees, compliance testing, basic operation, you know you've got a red flag. If the investments are the only conversation, the plan is not being fully managed. If an advisor thinks that there's a Fidelity 401k plan and an American Funds 401k plan and a John Hancock 401k plan, they don't know what the heck they're doing. Even Filippo understands. Run, don't walk, don't crawl, run away. Okay? Because there's a 401k plan that gets to pick its vendors. And then within those vendors, they get to pick their investment options, okay? Very important difference now.
The document is the plan.
The document is the plan, correct. Okay.
And then
Next.
the money goes places.
Right. Next, Katherine.
It's not understanding plan fees. Can't clearly explain record keeper fees, advisory fees, and revenue sharing.
Right. They're completely, they just don't understand. And then I guess we need to add on to this not understanding the new plan tax credits, okay?
And I would just say if they have an emphasis on whether fees are visible or not. If somebody's telling you, oh, you have no fees, the plan pays for it, or the participant pays for it, there's still fees, and you still actually need to know and see if the math actually works.
Right. There's the record keeping fees. There's the actual investments themselves, their fees. There are the advisor compensation. Sometimes nominal fee is taken out of the plan to cover some of our fees. All right. Your your financial professional needs to understand this, and they need to understand how fees work. We recently had, actually it was a very lovely lunch, very delightful conversation with some financial professionals who were seasoned financial professionals, but were new to the ERISA game. And they were under the understanding that most of our fees would come from the plan's assets. And I said, well, yes, they can, but that's a tactical or a strategic conversation. Is this a plan that is just for the employees, where the employer doesn't want much participation, the employees are just going to defer? Or is this a plan where the vast majority of the plan's assets are going to be for the company owners? They said almost all the assets, they're going to try to have as much of the assets be for the employer as possible. I said,
so the employer's paying the most.
So the employer's paying the most. Why would you reduce the rate of return for the employer? Have the plan sponsor.
Well, when you say employer, you're talking about the person.
The employer is the owner. They're also a participant. They wear a lot of hats. The next area to pay attention to, whether or not they have some concept of compliance testing. If they continually say you fail top-heavy testing, or what was it, the old 60-40 test or the 70-30 test or whatever, no. They're a little misinformed. So you do not want an advisor to shrug off the importance of the compliance work, because it's what makes the deductions and contributions legal. All right? There are contribution limits. They need to understand how they work. They need to understand the difference between what I love, and this is a part of compliance testing. What I love is when a financial professional tells me, oh yeah, they've got some 1099 employees. Which one? Are they 1099 or are they W-2? You can't be both, all right? So it's important that they have a basic understanding. They don't have to understand what the tests are. They need to understand that they're important and that they need to be done at least annually. What's the next one, Katherine?
Well, overlooking fiduciary responsibilities. So advisors avoid discussing who is the fiduciary or don't help the decisions, or they're just like straight wanting to shift it to one single person as
Right.
a sacrificial lamb.
Which is
And
sometimes
it's not.
us, and it's not. No.
And, the employers always has a little bit of fiduciary responsibility because they made the decision of the vendors. You just can't get rid of it.
Correct. Yeah. A financial professional who says that a plan sponsor, the owner of the company, can offload all of their fiduciary responsibilities, does not understand the fiduciary rules. Also, when a financial professional is not clear about whether or not they are also a fiduciary, run away. No, not every financial professional is a fiduciary on the plan. Some broker-dealers prohibit them from being a fiduciary. That's not a bad thing, as long as you understand the role that your fiduciary is going to be able to play. My understanding is if a financial professional starts giving investment advice, now the A word is a very specific word when we're talking about ERISA plans. If they start giving investment advice, they're most likely a fiduciary. If they're giving guidance and education, they're not.
They need to know the line, and actually their role should be to help you manage it versus going, let's escape it, let's manage it.
Right. Now then, also something to pay attention to is when a financial professional says, oh, we can set something up for that only the owners benefit from and the rank and file don't. Yeah, probably not.
Need to follow the law. Mm-hmm. Okay, so are there weaknesses in participant education?
Oh my God, yes there are.
There's weaknesses all the time. We need to strengthen their muscles.
Now, this has gotten a little bit harder to do since the before times when so many employers no longer have brick and mortar or everybody works in the office and things like that. So education's a little bit harder to make sure it's happening. Yes, it's easier to distribute via technology. But one of the signs of weak participant education is when you ask a plan sponsor, so Katherine, who's your financial advisor on the plan? And the answer is,
do we have one?
I don't know.
What is that?
Yeah, what is that?
What is that?
Yeah, that's a very good indication that your participants are not getting the education. It's also a pretty good indication that the plan sponsor is in violation of their fiduciary duties because fees are most likely coming out of the plan, and they don't know who they're going to or what the services are for those fees.
Another one is no collaboration with the retirement plan consultants, formerly known as TPAs.
Yeah, if they don't want to work with us, if they're trying to tell us what to do and that their job is more important than ours and that they're not our client, yeah, that's not a good relationship.
So the red flag is if they see the TPA or retirement plan consultants as an obstacle instead of a partner, because we are really working overtime on making sure that the plan's compliant and the right things are happening.
Exactly.
Which really helps reduce the risk in terms of all of this stuff going sideways.
We are the plan sponsor's advocate, Hunter Benefits, that's how we act. We are the plan sponsor's advocate, all right? We are there to make sure that things don't go sideways.
And how to fix them if they do.
Now then, hopefully this was helpful. And if you would like us to review your 401k plan for potential errors and opportunities, please sign up with the link below. And if they have specific questions, how do they get in touch with us, Katherine?
Well, they can email us at sales@hunterbenefits.com because Christopher no longer takes fire signals.
No smoke signals. They're usually smoke signals, okay?
Depends on how much gasoline you use.
The telegraph and the stock ticker are out, okay? Sales@hunterbenefits.
But I do still like carrier pigeons.
Carrier pigeons will work if you can find a carrier pigeon. Now then, obviously, you understand the assignment. Like, subscribe, comment. If you're watching, please comment. If you've got a question you'd like to ask everybody, post it there, all right? And then, of course, most importantly, please don't forget to keep those cards and letters coming.
Toodaloo.